webinars on how to do business or how to collect sales tax or what's new in individual states. Unique. Frankly, in many ways, Texas is not unique, but there are a couple things about Texas that make it just plain odd. And that's why we picked one, and you'll understand this once we get into it a little bit. I'd like to start with where do you start? How do you calculate the rate? And then get into the things that are, wow, I had no idea you could do that. That's me. My expertise comes from running South Dakota sales tax for 10 years and then spending 7 years as the executive director of the Streamline Sales Tax. I have spent my teaching and writing about getting started. What does Texas tax and exempt? Rates and other factors about calculation. Local taxes, origin sourcing. I should have put a big asterisk there because that's the interesting concept in Texas is origin sourcing. And then local taxes. And then filing a return and making a payment. Okay, they're going to call you a seller or a retailer. Some states call you a dealer, which is Florida. In a couple others, you're a dealer. You're not a merchant. You're either a seller or a retailer. One of the things that makes Texas not completely unique, but mostly unique, is that their tax commissioner is elected. The only other place where the tax collector is North Dakota. They are the two states that the comptroller in Texas does more than just deal with taxes. He or she also has a number of other financial responsibilities for the state. It's actually a very important and powerful position in Texas. Weak governor form of which governor in Texas, and frankly in states that have that form of governor, have less authority than other governors, less authority than you might normally manage, and certainly less authority than a CEO would have for a corporation. Because in Texas's case, are elected, and so the comptroller little to no authority over how the comptroller administers his or her agency. He's in Texas where that's the case. So, getting started. You have to have an application. Anybody that's engaged in business in Texas must have a license. There's no charge for either. They may require you to post a bond, and it's a little outside the norm in today's tax administration world. Missouri automatically requires you to post a bond. There are a number of states where you have issues. You come to them with a bad filing record in their state or another state, or you develop a bad filing record in their state, and in those situations they may require you to post a bond. Now, in Texas's case, it's not automatic. The comptroller may waive the bond requirement, and they have procedures in place that they use that they presumably follow every time. But just be ready if you open a business in Texas. Certainly should try. If you have multiple locations in Texas, you have to have is in one of the, later in the presentation we'll talk about what a place of business is and why it's kind of unique to Texas. And as you can see, a warehouse, a manufacturing, there are frankly in most states, a manufacturer, there would be certain tax obligations that were specific to that location that state would require knowledge of and to be able to track separately. In Texas, you don't have to have that. A place of business is a place where you're engaged in business and you are making sales, and that's really how you are making sales. Now, place of business by making sales there. So if you're operating in Texas and you don't want to have a permit for your manufacturing plant, don't make sales out of your manufacturing plant. Have a business location where you make sales. And you'll learn later in the presentation why it's important not to have multiple locations in Texas. If you're an agent in the state, yours. Those are the states. Get started, you have to have a license, you have to have a permit, and you have to fill out an application. You have to have a separate one for every place where you are engaged in business. So Texas is, and I use the word traditional here, and traditional may not be what some might use, but sales taxes are imposed, not followed, the law that support what the state tells you. In a normal state, a traditional state, a typical state, the law is that all tangible personal property is subject to sales tax unless it's exempt, and all that's the norm. And frankly, there's only 4 states where that's different, and in those states, the difference is related to services. So the 4 states are Hawaii, New Mexico, South Dakota, and West Virginia. In those 4 states, tangible personal properties, all tangible personal property is subject to sales tax unless specifically exempt, and all services are subject to sales tax unless specifically exempt. Texas is different from that when it comes to services, and Texas is certainly in the majority when it comes to services. Oops, sorry about that. However, where Texas is a little bit different is in the number and types of services that they tax. Whitney? I'm sorry, folks. I'm having some issues with my internet. Whitney, can you open up the slide deck, please?
Yeah, sure thing. Just a second here.
Sorry. I apologize, folks. My server has been doing this all morning long, but anyway, since I have a slide up, I hope you can see a slide that shows a line that says, unlike many states, Texas taxes a broad range of services. And they tax 17 broad categories of services. And 17 is certainly not on the high end. the 4 states of West Virginia, South Dakota, New Mexico, and Hawaii, those are on the high end. Those states effectively tax all services. West Virginia a little bit less than the other 3, but in South Dakota, New Mexico, and Hawaii, they tax all services. And their list of services will be, close to 100. Texas has, at 7, even though Texas says they tax 17, there's a broad list of services that go into that 17. Amusement services, live and recorded performances, exhibitions, displays, sporting events, participatory sports and games. Those are all subject to tax. Cable and satellite television services are taxable. Credit reporting services, data processing services. Now, data processing services has some conditions. And so if you're in the data processing business, you would need to get the Texas statute and specifically look at how they define that and be very careful in how you do that. Debt collection services, the tax based upon where the debtor resides. So if it's a Texas debtor and that collection services are being provided in Texas, that would be taxable. Information services is still a very broad category, and there's lots of things that go into what could be an information service. Where they're a little bit unique in Texas is that they exempt 20% of that. So if you're in the information service business in Texas and you're subject to sales tax, 20% of your charge will not be taxable. Insurance services, and then not insurance per se, but services used by an insurance company to provide insurance, related to providing insurance. Some additional services that they tax, internet access charges. If you've been following the tax news, you know that Congress has prohibited states from taxing internet access. But those states that are grandfathered, that were taxing internet access, have a couple more years of being able to do that. Texas is, again, different than the rest of the country. The rest of the states that were taxing internet access, they tax the first 25. No, every other state that currently taxes internet access taxes 100% of the charge. In Texas, they exempt the first $25. So if your internet access is $27, well, the first $25 is going to be exempt. They tax motor vehicle parking and storage services, non-residential real property repair, restoration, or remodeling services, personal property maintenance, remodeling, and repair services. Two of the most complicated areas of state sales taxation are construction services, and whether it's residential or non-residential. They tax non-residential. States are all over the board on this. Personal property repair and maintenance, that's a relatively reasonable thing to tax. If you tax the sale of a television, it makes pretty good sense that you tax the repair of that television. Otherwise, you give the person who repairs a television a tax advantage over the person who's selling a new television. Personal services is dry cleaning, carpet cleaning, and massages. They don't tax anything related much related to a person. So getting a haircut, getting your hair done, those things are not taxable. A massage is one of the few things where that's related to the body that is taxable. Real property services, such as pest control, garbage collection, landscaping, and lawn maintenance, are all taxable. Security services, telecommunication services, utility transmission and distribution services, and we can go into a long conversation about why those are taxed. And then there's a number of miscellaneous labor charges that are subject to sales tax. Now, what do they exempt? They specifically exempt or exclude a number of organizations. So there's a pretty good list of these. In broad terms, they exempt nonprofit, charitable, educational, or religious organizations, youth athletic organizations, chambers of commerce. Lots of them in Texas, huge state, lots of these different types of organizations. When it comes to products, they frankly don't exempt a lot of products. but the ones that they exempt are relatively normal. They exempt healthcare supplies such as drugs, prosthetic devices, dietary supplements, and products for the blind or the deaf. They exempt agricultural inputs and equipment, very normal exemption. They exempt manufacturing inputs and equipment, once again, a very normal exemption around the country. They exempt gas and electricity when used for residential, agricultural, and manufacturing purposes. It's not a commonly exempt product, but there's a number of states that exempt residential gas, electricity, or frankly all three of those things. It's not uncommon for a state to exempt gas, electricity used in agricultural purposes and in manufacturing process. They exempt food for human consumption, groceries, and that is the majority of states, somewhere around over 30 exempt groceries. They use a whole host of definitions for how one gets to what groceries are. In Texas's case, they use the phrase food for human consumption, a very broad definition, and it's akin to the definition used by the streamlined sales tax states. What they don't exempt, though, is prepared food, ice, candy, or non-alcoholic carbonated and non-carbonated packaged soft drinks that contain natural or artificial sweeteners. So if you're in the food business in Texas, the overwhelming majority of the food that you sell is going to be exempt from the sales tax, unless it's prepared, unless it's ice, unless it's candy, or it's a soft drink. So when you're in business in Texas and you're making sales to someone who claims that they are exempt, like every other state in the country, the liability falls on the merchant. There are the streamlined sales tax states have slightly different rules. In those states, there's some protection given to retailers when that person collects a completed exemption certificate. Texas, the obligation is on the merchant to know when and when not to charge sales tax. You must maintain copies of the certificates of exemptions, and you must be able to document that merchandise that you sold out of state was actually delivered out of state. So you have to have in your books and records, you have to be able to prove that the destination for that product was outside of Texas. A good thing for merchants is that exempt organizations must complete an application to be exempt. So there isn't any way that they be exempt or claim to be exempt unless they have completed an application with the state. There's two general types of exemption certificates: the resale exemption certificate and their exempt entity certificate. You must have that in your, I've got that in here twice because it's important that you remember that you are responsible for proving that was an exempt sale. Now, one interesting and unique exemption in Texas is one I can't pronounce, and I'm not even going to try to pronounce it. But it is a business entity chartered by the government of Mexico that is authorized by the government of Mexico to make duty-free imports of raw materials, component parts, or other property into Mexico to be used in manufacturing, processing, or assembling items by the business entity in Mexico, primarily for export from Mexico. There are a couple other states that have exemptions for those who are taking either manufacturing equipment, mostly it's manufacturing equipment, where you come into the state and you take physical possession of the item inside of that state, but you're going to use it in the manufacturing process in Germany or some other place. There are a couple other states that have an exemption like this one. This one is a bit broader. Okay, the tax rate and how to calculate the tax. State tax rate is 6.25%. The maximum rate that may be charged, state plus local, is 8.25%. And this maximum rate is very important for you to remember. You must know, and you must not ever charge more than 8.25%, because there are going to be situations in Texas where if you add up all the rates that you should collect, it will exceed 8.25%. But by Texas law, you cannot charge more than 8.25%. So the sales tax is the sales price of the taxable item times the tax rate. Pretty straightforward. That's not the case in Florida, but in Texas, that's a relatively straightforward thing. If an invoice includes multiple taxable items, the tax is the total sum of all the items times the tax rate. Straightforward. Makes sense. The total tax rate is the state tax rate plus the city rate plus the county rate plus the transit rate plus the special purpose district rate. You must separately state the tax on a sales slip, whatever you give to your customers as evidence of their purchase, must separately state the sales tax. You may not advertise or indicate that you're going to absorb or pay all the tax for your customers. The tax is imposed upon the customer, and you are the agent of the state collecting that tax, and you're collecting it from the customers. It's the customer's job to pay it. You must be able to prove it. And once again, I'm going to reiterate, you cannot collect more than 2% for local sales taxes. And this is, I'll get into this sales tax versus use tax thing in more detail later, but if you collect a sales tax for a city, county, special purpose district, or transit authority, you cannot collect a use tax for another local taxing jurisdiction of the same type. It's the version of origin sourcing that Texas uses for its local taxes is very complicated. Okay, let's get into the local taxes. There's lots of them. And unfortunately, I got a blank in that line, and the blank's intentional because I couldn't get the state of Texas to tell me how many cities have a sales tax. There are 1,217 cities in Texas, and I don't know how many have a sales tax. I have their chart of local rates, and there were too many on them to count. So I didn't bother to count. The city rate may vary from 0.25% to 2%, depending on the local rate. They may impose an additional local sales tax for a combined state and local sales tax of 8.25%. Once again, remember, 8.25% is the maximum rate that can be charged in Texas, state and local. There are 254 counties in Texas. 123 have a sales tax. The county rate can vary between 0.5% to 1.5%. Once again, capped out at 8.25%. There are 10 transit districts in Texas, and the transit rate may vary from 0.25% to 1%. They too can have an additional tax above if, as long as they're inside that cap of 8.25%. The 10 districts consist of 6 metropolitan transit authorities, 2 city transit departments, 1 county transit authority, and 1 advanced transportation district. There are 277 special districts with a tax. And I have not tried to list out what makes them special, but there's all kinds of reasons why one can create a special district. Their tax rate can vary from an 0.8% to 2%. Once again, depends on the local rate. It depends on how many other jurisdictions at that location have a tax and what their rates are. So, local tax, frankly, for the most part, local taxes in Texas apply to the same products and services as the state tax does. The big exception, and this is a huge exception, from a dollar and cents perspective is natural gas and electricity. The state exempts residential use of natural gas and electricity starting in 1979. And this is that bullet. So in 1979, the state exempted residential use of natural gas and electricity. Well, in 1979, there were hundreds and hundreds of cities that were also taxing residential natural gas and electricity, and they convinced the state legislature that while the state may have the resources to not collect sales tax on natural gas and electricity, each of those local governments might not. And so the state grandfathered in everybody that was taxing natural gas and electricity in 1979. There are 776 cities in Texas that have a tax on residential natural gas and electricity. Remember, the state exempts it. Counties, transit authorities, and most special purpose districts may not tax residential use of gas and electricity. But this is just a city issue. If the city did not have a sales tax on October 1, 1979, if its tax came later than that, or since 1979, the city cannot tax residential use of gas and electricity. So if you only those cities that had a tax before October 1, 1979 can have this local tax up until 2010. And then in 2010, the state legislature authorized fire control, prevention, and emergency medical service districts and crime control and prevention districts that are located in all or in part in a city that imposes a tax on residential gas and electricity to tax these two things. So natural gas is exempt from the state. It's subject to tax in 776 cities with a tax. And starting in 2010, it can be subject to tax by fire control, prevention, and emergency medical service districts and crime control and prevention districts if they are located inside of a city that was grandfathered in and still collect sales tax on gas and electricity. No other special districts may tax it. Okay, so that's the one big tax-based difference between the city and the state. Now the thing that makes Texas really interesting: origin sourcing. If you pay any attention to the issue of a remote sales tax in Congress, you know that one of the ideas being talked about is to give states more authority and to allow states to use origin sourcing on interstate sales. Today, and in Texas, every interstate sale is tax-based upon its destination. You make a sale from New York City to Texas, you got to know what the local rates are in Texas, and you got to collect sales tax on that. If you make a sale from inside Texas to another place in Texas, you may or may not have to collect the rate at the local or where it's being delivered. You're more than likely going to collect the rate based upon where you are located. But it is a function of whether or not you're collecting sales tax or use tax. In a typical state, on an interstate sale, if you don't have a physical presence or you don't have a business location in Texas or Kansas or North Dakota, but you make a sale in there and you collect their tax, what you're doing is you're collecting the use tax. If you're inside the state, you're collecting the sales tax. In Texas, they take that sales tax versus use tax to intrastate sales as well. So if you're a seller in Texas, you may be collecting sales tax and you may be collecting use tax on the sale inside of Texas. To be able to correctly calculate and collect local sales and use taxes in Texas, you must know what these three things mean: where the order is received, the definition of place of business, and the definition of engaged in business. A place of business is a store, office, or other location operated for the purpose of receiving orders for taxable goods and services. Most of us think of a place of business. An over-the-counter sale is a sale where you walk in, you walk down the aisle, you pick something up, you take it to the counter, they charge you for the product and they charge you sales tax. Well, that's a place of business, and that is where you have received orders. They have received an order for a taxable good, which you walked up to the counter. So, as I said earlier, a manufacturing plant, warehouse, or other location not operated for the purpose of receiving orders is not a place of business. The exception is when you make 3 or more sales from there. So if for some reason or another you have a business in Texas at one location and you also have a manufacturing plant at another location, if for some reason or another you decide that you are going to make sales or take orders from the manufacturing plant, if you do more than 3 of those in a year, you turn that manufacturing plant into a place of business, and then A, you have to go back and get a permit for that location, and B, you start having to keep track of the local sales and use tax differently than you do from your place of business. So, engaged in, as I said, you need to know the definition of engaged in business. A merchant is engaged in business in a local government if the merchant has locations, sales representatives, makes deliveries, leased equipment, or provides services. So, in the definition of engaged in business, there were those terms. Locations, permanent or temporary locations, whether operated by the merchant directly or through an agent. These may be an office, a warehouse, a distribution center, storage place, sales or sample room, temporary booth, or any other place of business. Sales representatives, agents, salespersons, canvassers, solicitors, and independent salespersons operating on behalf of direct sales companies. A representative includes a seller or other company that accepts returns of merchandise from an affiliate or related business entity. So if you are part of a conglomerate, and one of the brother-sister companies will allow your customers to bring price that you sold them back to them and return it, that turns that entity into a representative of yours. Make deliveries. You make deliveries using company vehicles, whether owned, leased, or rented, to deliver taxable items to customers in taxing jurisdiction. You are engaged in business. If you derive income from the lease of equipment or other tangible personal property in taxing jurisdiction, you are engaged in business in that jurisdiction. Or if you provide service, if a service is provided by company employees or authorized service agents, including subcontractors, inside a local jurisdiction, that means you are engaged in business. So these 5 things, location, sales reps, make deliveries, lease equipment, provide services, will mean, if you do any of them in a local jurisdiction in Texas, that means you're engaged in business in Texas, even if you don't have a place of business in Texas. Remember? Place of business. Place of business is a store. Engaged in business are all these things. The 2 things are separate from each other, and it's important. It's really important because it makes a difference on whether or not you're collecting sales tax or you're collecting use tax. It's a busy slide, and I'm going to have to go through it because this is really complicated stuff. Local sales taxes are collected based on the location of the seller's place of business. So, origin person. You collect sales tax based on the location of your business, except if the seller's only place of business is in the local government, sales tax is collected for those jurisdictions on all sales taxable items made to customers in Texas. When a seller has more than one place of business, local tax is collected by the place of business. I'm sorry, I'm missing a word out of the sentence. The local tax collected is determined by the place of business from which the item is shipped, not the location where it is received. So you have more than one place of business in Texas. You have 7 stores in Texas. And you have a customer that orders something from you, purchases something from you, and you ship it. You will charge the sales tax based upon where the item was shipped from, not where you happen to have received the order. Drop shipments made by a third party are taxed where the order is received, if the order is received at a business location in Texas. Now, Texas considers in-state businesses to be drop shippers if an in-state business has a warehouse in another state that delivers products into Texas. So you are a place of business in Texas. The business is in Texarkana. Your warehouse is in Arkansas, 1 mile away. Frankly, maybe 100 feet away in that city. In that situation, even though there's only one person involved in this transaction, and it's you, it's still a drop ship. Drop shipments made by a seller are taxed for the products delivered. The order is received at a business location in Texas, but the product is shipped by the seller from the seller's business location outside the state. That's my Texas, Arkansas example. If tax where the product is delivered, your shipment is nation location within Texas, which is not a place of business at the Texas retailer. Local sales tax is due based on the retailer's place of business from which the salesperson operates. If you have salespeople, and if you are a Texas business and you have salespeople in Texas, you need to have them associated. There needs to be a physical. Okay. Local sales tax is due based on the retailer's place of business from which the item is shipped, regardless of which place of business the sale. Note that a business with traveling salesperson is considered to be engaged in business in all locations where the salesperson has made sales calls, and the seller may have to collect local e-taxes in addition to local sales taxes. Okay, that's where we start to get really, really complicated. If this list of things wasn't complicated, between place of business and engaged in business. You can be engaged in business and not have a place of business. You can be engaged in business in Dallas without having a store in Dallas. If your store is in Austin, the place of business for you is in Austin. But if you have salespeople that travel around Texas, you are engaged in business wherever that salesperson is located, or wherever that salesperson goes. And that can give you a real headache, because if you collect sales tax following the right rules, and the total local sales tax doesn't equal 2%, which, remember, is the maximum that you can charge for local taxes, and the places where you are engaged in business have a 2% rate. So where you're shipping the products from is a 1.5% local rate. Where you're shipping the products to is a 2% rate, and you have a salesperson that goes in there and you are engaged in business there because of the salesperson. You will have to collect a 1.5% sales tax from where the product was shipped, and a 0.5% use tax where that product was delivered. Your sales tax return is going to get complicated very quickly. So, one more thing. A seller who does not operate a place of business in Texas, but who travels to various locations in Texas, is an itinerant vendor. Itinerant vendors must collect tax for all local taxing jurisdictions in Texas where deliveries are made or where the customer takes possession. Normal destination sourcing. If a seller does not operate a place of business in Texas, have salespersons who travel throughout the state soliciting sales and have orders shipped from a location outside of Texas, then no local sales tax is due. However, you will collect the local use tax based upon the point of delivery. A temporary place of business is a location that is established for the purpose of receiving orders and making sales for a limited period of time. A booth at a craft show, an art show, is a temporary place of business. When a seller operates a temporary place of business, local sales taxes must be collected for the taxing jurisdictions in effect at that location on all taxable items transferred to customers at the time of sale. You open up a booth at an art show for a weekend, and you sell something to somebody at that location, they take possession of it there, you're going to collect the local sales tax. If a seller receives an order at a temporary location that is later filled and shipped from the seller's store in Texas, then the local sales tax are based on the place of business from which the item is shipped and not the temporary location where the order was received. You are an artist, you go to an art show, and you have your art that you present, and then you have a catalog of all the other art that you have. You sell a piece of art to someone, they take it, you charge them the local sales tax based upon where the art show is located. You take an order, sell a piece of art to someone from your catalog, and that is then later shipped to them. You will then charge the sales tax based on your place of business from where it was shipped, and not where you were when you took the order, the temporary place of business. Remember, and I've said this multiple times, and I apologize, but it's really important. A seller may not collect more than 2% of combined local sales and use taxes. If an applicable type of local use tax cannot be collected at its full rate without going over the 2% maximum, even if the use tax is technically due, the seller cannot collect it. The seller must collect applicable use taxes in the following order by type of tax, making sure not to collect the same type of use tax already collected as sales tax on the same transaction. Remember, making sure not to collect the same type of use tax already collected as sales tax in the same transaction. So when you're calculating how you get to 2%, you do it in this order. You start with the city tax, you go to the county tax, you go to the special purpose districts, then you go to the transit tax. And you stop wherever you get to 2%. So if the city rate is 1% and the county rate is 0.5% and the special purpose district rate is 0.5%, it's irrelevant that there's a transit tax. It's only relevant when you add the four of them together, you are at or under 2%. One way to think about this is to first collect all applicable local sales taxes relating to the sale of a taxable item, then never more than 2%. That's right. So once again, you follow in that order: city, county, special purpose, transit, 1, 2, 3, 4. You add them up. Start with the city, add the county, add the special purposes, and you stop whenever you get 2%. If a seller's only place of business is outside the local taxing jurisdiction, and he or she ships or delivers taxable items inside the taxing jurisdiction, the seller must collect local use taxes if he is engaged in business in the jurisdiction. And you remember the definition of engaged in business. Doesn't mean you have a store there, but it means that somehow, some way, you have physical presence there. When the seller has more than one place of business, the local taxes that are due are determined by the place of business from which the items are delivered. If goods or taxable services are delivered from a place of business outside the taxing jurisdiction to a location inside the taxing jurisdiction, like use tax jurisdiction, if the seller is engaged in business in that jurisdiction, remember, if you have a place of business, you're collecting sales tax. If you're engaged in business, you're collecting use tax. If a seller receives an order at a place of business in Texas and the taxable goods or services sold are delivered to Texas Customs from the seller's out-of-state location, we've talked about this a little bit already, and if the seller is engaged in business where the product is delivered, the seller should collect use tax and not sales tax. Remember, place of business sales tax, engaged in business use tax. Even if things are delivered in this example, are delivered from out of state into Texas. If you are in Texas, you are in Texas. And if you are engaged in business in that jurisdiction, you're there. And then at that point in time, it doesn't make any difference whether you're shipping that product from an in-state location or an out-of-state location. And that's it. So the seller receives an order at place of business. Okay, so your place of business is outside of Texas. A delivery or shipment is made to its customer in Texas from a location within a state that is not place of business. Seller must collect use tax for any city county where the seller is engaged in business. So you don't have a place of business. Your order is received outside of Texas. At your place of business outside of Texas. Delivered into Texas to a jurisdiction where you are engaged in business, you're collecting use tax. And I apologize for all these rules, folks, because it's complicated in Texas. If an order is received by a salesperson assigned to a place of business located outside Texas, a salesperson assigned to a place of business located outside of Texas. Remember, I said it's important, if you have salespeople, to assign them to a place of business. And delivery or shipment is made from a location within Texas other than a place of business of the seller, such as the warehouse or distribution. The seller must collect use tax for the local government where the product is delivered if the business. Once again, very similar rules, just lots of different ways that someone can make sales. So, origin sourcing. Everybody thinks it's simple. It is simple if you are a simple business. If you're not a simple business, it's not simple. Internet sellers. A seller's home may be a place of business if the seller receives or processes 3 or more orders during a calendar year. So if you're someone who's selling things in an online auction or any of these other third-party marketplaces, and you sell 3 or more items in a year, your home has become a place of business, which requires you to get a permit, requires you to know whether to charge sales tax or to charge use tax. The location of the seller server, so that third-party marketplace where you sell your products, where they're located is irrelevant, where their servers are located is irrelevant. What's relevant is that you're in Texas and you've made 3 or more sales in Texas in a year. And internet sellers engaged in business if there's a related or affiliate entity in the jurisdiction that accepts returns of merchandise. This is a different entity. So this is a situation where you're a seller. You're an online business located in New York City, and your obligation to collect sales or use tax in Texas can be impacted by a related or affiliated entity. So if you have an online .com business located in New York City with no physical presence in Texas, but your store affiliate is located in Texas, that store affiliate will give you physical presence in Texas and require the online sales tax. But remember, when you're collecting the local tax, if you are engaged in business and don't have a place of business in Texas, you're collecting the use tax rather than the sales tax. Okay, some things that aren't sourced that way. Tax where the performance or event occurs. Cable TV, tax where the customer receives a service. Florist, tax at the location, the place of business that takes the order, regardless of where the delivery is made. So florist shipment is irrelevant. For florist, it's always, every time, going to be where the order is taken. Customer receives the gas or electricity. Okay, you figured out whether you're collecting sales tax or use tax. You have made sure that you aren't collecting more than 8.25%. You have made sure that you have a permit for every business, all your salespeople to a business location, and you know where you are engaged in business. Once you've done all those things, now it's time to give the state the money you collect. So, 3 types of filing: monthly, quarterly, annually. It's all based upon how much you file or how much you collect. If more than $500 in tax a month, you're going to be monthly. $500 to $1,500 a quarter, $500 a month or $1,500 a quarter, you're going to be quarterly, and less than $1,000 in tax a year, you're going to file annually. Like every other state in the country, if you have a permit, and they assume you're going to collect sales tax and that you are going to file a tax return. If you have no sales, you still must file a return. It's important. Now, there's a collection allowance in Texas. You get to keep 0.5% of the tax that you have collected as compensation for doing all the things that are necessary to figure out how to collect sales tax. Plus, you can also get another 1.25% of the tax if you are willing to pay the tax by the 15th day of the month. If you are so inclined, you may donate that collection allowance to a Texas educational fund to help fund education in Texas. 2 types of returns, and they're, for the most part, the difference between a short form and a long form is whether or not you're collecting use taxes. So you can use the short form in Texas. If you have a single location, you report applicable local taxes only to the entities where your business is located. You do not prepay your state and local taxes. You do not have a credit to take on the return for taxes you paid in error on your purchases. And you do not have a customs broker refund to report. Now, I didn't talk about a customs broker refund because it's really complicated and it's not normal. But if any of those things apply to you, you have more than one location, you're collecting taxes in multiple jurisdictions, you want to prepay your taxes, you want to get the 1.25% discount for prepaying, you need to take a credit because you have bad debts, and you have to use the long form. In addition, you have to use the long form if you're responsible for out-of-state use tax and have no in-state locations. Oh, what are those? What's new, Michael? There we are, folks. And once again, I apologize for my internet access. I hope that when we can get you a copy of these slides, be happy to do that. And we have recorded this. So if there are any questions, Whitney, can you help me with the questions?
Yeah. We have just a really quick question, home-based business requirements. What are your thoughts on that?
And I don't know much about home-based business requirements other than if you're making sales from that home base, you must have a permit. And there may be local zoning requirements that you have to go through, but I'm not an expert on local zoning, and so the only thing that I do know is that if you're making sales, they're going to expect you to collect sales tax, and they're going to expect you to have a permit.
Great. And then after that, pretty much, we just have a few people that really want to get their hands on this deck, so I will definitely be sending that out to you, all who registered for the webinar today.
Well, once again, folks, I apologize for my internet issues, and I'm going to be calling my cable company as soon as I'm off this call, and we're going to be chatting with them about why I'm struggling with this. Thank you very much. Please join us on our future single state webinars. I hope you found this interesting. Thank you.